Awesome. Good afternoon, everyone. I'm delighted to be here speaking with you today on this webinar. This webinar is very special to me because I will be introducing who will be leading our webinar, Mr. Darrell Tennie. Mr. Darrell Tennie is a gem in North Carolina, and I'm just so glad to be associated with him and know him. He has been awesome for our farmers in North Carolina. Now he's going to be nationwide speaking with you today. So, so give me 1 second, y'all. I'm trying to pull up some information for Mr. Tennie that I had here. Okay. All right. So let me give you a proper introduction. So, man, technology. Darrell Tennie, Chief Executive Officer for the Tennie Group, LLC. He is the founder and Chief Executive Officer for the agribusiness development firm, Tennie Agricultural Group, LLC, a tax and accounting firm servicing clients throughout multiple states across the U.S. with a focus on sustainability and building entrepreneurship and business development within our social economic disadvantaged communities, along with an emphasis on agribusiness development. He is a graduate of the South Carolina State University, where he received his undergraduate Bachelor's of Science degree in agribusiness, class of 1987. In addition, he has a Master's of Business Administration, MBA, class of 2000, as well as a Master's in Art Design and Human Resource Development, MA, from Webster University, class of 2004, along with over 20 years of experience in corporate America. Additionally, he currently owns and operates the following companies: TenderCare Home Healthcare, Circle of Angels Home Healthcare, the Tennie Group, Agribusiness Crop Insurance Group, the Insurance Solution Group, and the Farmers Outreach Solutions, a nonprofit. In addition, he serves on several advisory boards to several organizations, including the North Carolina A&T State University LC Junior Cooper International Trade Center Advisory Board, Hot Liquor Capital Advisory Board, North State Bank Advisory Board, North Carolina State Employees Credit Union Advisory Board in Knightdale, and the Knightdale Rotary Club. His mission is educating and empowering everyone in understanding accountability to ensure sustainability with a solid foundation, emphasizing scalability. Let's please give our undivided attention to Mr. Darrell Tennie. Thank you, sir.
Mr. Taylor, I want to say thank you so much. And sincerely, I want to thank y'all so much for the great opportunity. But to everyone, I want to say thank you so much. And we appreciate the opportunity to talk to you today about agribusiness development. And so we're going to bring up our presentation today, and we encourage people to ask questions throughout, okay? All right, so again, Mr. Taylor, we have the Brandon Young Guns. I'm going to bring up our information. I want to make sure everyone can, okay, we're all coming out right now. Okay. All right. All right. All right. All right. I want to make sure everybody can see. So today we're going to talk about the agribusiness way. And one of the things about the agribusiness way, I would like to tell everyone, this is, you see on the side that you see that word called TM trademark. We trademark that, okay? And one of the reasons I trademark that, because one of the things that I want to bring an understanding of agribusiness. You know, we want our farmers and our agribusiness men and women now, and as we're trying to bring the next generation into agriculture and trying to create sustainability along with scalability. Our mission is to educate and empower everyone in understanding accountability to ensure sustainability with a solid foundation. That's our motto. But we're going to amend that this year because we want that to say to ensure sustainability along with scalability. And that's one of our goals, is to scale our producers now, to scale our agribusiness owners and stuff. And so we're going to talk about today, what does that mean, the agribusiness way? But one of the things we want people to understand, we want our farmers to understand, we want your entities operating your farms instead of yourself. We want to change that thing where all the debt and liabilities fall on the individual. We want to change that where we're passing debt down generation. We want you to understand how we want your entity structures and define what does it mean to have agribusiness development. So for the sake of time, we're going to move along, but we do encourage people to ask questions, okay? Now, have to get the disclaimer. This information you hear today regarding entities for tax purpose only and its relations. We are not lawyers, but we can recommend lawyers that we work with that can provide you with legal advice or information. Now we do, as Mr. Taylor said, we do work around the country now, including the territories, okay? And we have offices in North Carolina, South Carolina, Shannon, Mississippi. We have a wonderful organization, Mississippi Minority Farmers with Ms. Jones there. We also have in Pine Bluff, Arkansas. We have offices in Pine Bluff, Arkansas, but we're also looking at various states, Indiana, even in the Las Vegas area, and plus we are trying to open an office in Puerto Rico now, okay? So we work with farmers throughout the country and the territory. Now, this is not only for North Carolina farmers, South Carolina farmers, this is nationwide. And the problems that we identify nationwide, there's a lot of people getting some misguided information. So we hope today the information that we provide to you will bring some clarity, but we have a firm that has, our taxation, not only taxation, we have payroll, financials, insurance. So our whole firm is all about complete wraparound services for our communities, okay? Along with Ms. Anna Villa, is on today, business development coordinator, and Ms. Nicole Hines is our business development relation engagement coordinator is also on as well. So today, we want to provide consultancy and training services in financial planning and agribusiness management, okay? And we want to empower, and educate, and assist in developing with a solid foundation. That's crucial, that's that foundation. And the best business practices and structure of agribusiness entities. I say that very clearly because we want people to understand we're talking about agribusiness development, okay? And identify and develop a solid financial management strategies through training and professional development, okay? This is what we want people to understand. What these goals mean, okay? We talk about entities, entity structures and stuff, but what does that mean to you? In the next few slides, we will define the different types of entities, okay? And I want to focus that word entities now, because this is what we're trying to pass on to our generational, is that we now need to operate as entities, okay? Now, sole proprietorship, partnership, S corporation, C corporation, nonprofits. How does those work? Well, we always say the best for last. That thing called a limited liability company. So often referred to as that LLC. As we travel this country and stuff, and we ask that question in present, how many people have an LLC? We get, a few people raise their hand. But when they raise their hands, we say, how many ways can you file an LLC? We don't get many hands raised because we want people to understand this is where a lot of people have problems understanding that limited liability company. That's where a lot of problems lie, okay? Now, we talk about these nonprofits. Everybody want to be a nonprofit. Not necessarily, We want people to understand how nonprofits should work. It should be the entry receiving your capital, but you always collaborate with for-profit entities to conduct service and business for you as well. So we're answering the questions about that. So now we're going to talk about today this thing called an SS4 form. We always ask people, how many people heard of SS4 form? Get a few hands. How many people heard of EIN numbers? Everybody mostly raise a hand. But we ask this question again, how many people in here have an EIN number? Not too many hands get raised and stuff, okay? Now, this is SS4 form, so commonly referred to as the EIN number. This, ladies and gentlemen, is the most important piece of paper you can have. But this is where people mess up the most from the absolute beginning. This piece of paper right here is what most people have the biggest problem with, okay? And here's why. Now, of course, you can do your name, address, but when it get down to that EIN number, say 9A, when actually type of entity, here's where the problems begin. Because a lot of people check these entities, but they don't understand these boxes, but they do not understand what it's saying. When people go to the Secretary of State, as we're gonna get further in, and they file the orders of organization, orders of incorporation, many people say, I done did it all. I done talked to the state and I done talked to federal. No, you did not. When you apply for your articles, you only talking to the state. They don't even know you exist from the federal side until you fill this piece of paper out. But once you fill this piece of paper out, you're telling them, here are my filing requirements for my entities throughout, okay? If you check the box sole proprietorship, you just told the IRS you're gonna file a 1040 Schedule C. Check partnership, you just told them you're gonna file a 1065. If you check corporation, you just told them you're gonna file 1120 or S, as we show how to classify that. If you check church, you just told IRS I'm gonna classify a church. I don't have to file taxes, but you'd be surprised how many churches are trying to file taxes, okay? But this piece of paper right here is what people have the most problem is understanding what does this mean when you filling this out. Now, The second piece of paper right here is extremely important because you're going to get this letter of confirmation of EIN number. But this piece of paper right here is going to tell you exactly what you are, okay? But this piece of paper right here, nobody reads, okay? So we want to get people to understand, and we're going to come back to this piece of paper because once you apply for that EIN number, you need this piece of paper because this is your most important piece here, okay, as well. All right, now, let's talk about sole proprietorships, okay? Now, sole proprietorship, also called independent contractor, consultant, or freelancer, a one-person operation. This business may have a number of employees or hired persons, but the proprietor owns, runs, and manages business. No funds are required to start this type of business. Only report income and expenses on a business form 1040 Schedule C. Now, as I'm saying to you now, this is a sole proprietorship, okay? Now, one thing about sole proprietorship, very easy to organize. But the biggest thing about a sole proprietorship, unlimited liability to the owner, the individual. And we tell people all the time, if you have ABC Farms of any business, and we're talking agriculture today, and we always say just take the word agriculture off as we go into any other types of entity, but for the sake of conversation today, we talk about business agriculture entities, okay? Now, when if you have ABC Farms, and ABC Farms made $100 a day, and you're a sole proprietorship, ABC Farms did not make one dime. You, the individual, made the $100 a day. You, the individual, is responsible for taxation. You, the individual, responsible for the liabilities. So, as we understand, a lot of times in our communities, we don't keep good records. And as we say, you being the individual have the responsibility. You, the individual, is responsible for filing that income. Now, I tell people all the time, it's not how much money you make. It's how you receive the money you make. That is what our problem is, okay? But now you have to get a good record keeping as we're gonna go in. So if you had ABC Farms today, ABC Farms made $100, but you say I had to drive off the day and I got to go somewhere to hear this conference to talk about agribusiness development, and I spent $50 in fuel. Okay, next year this time, your taxable income is only going to be $50. You say, Lord and behold, I didn't know if I was going to have any paper and pencil to write with. If I hear some information, I might can write it down as the old ones does now. Still write it down. And you stop by your local Walmart and you spent $20 in office supplies. Next year this time, your taxable income is only be $30. Lord and behold, you leave here today, you get back on your farm, you have a water leak, repairing your farm, and you spent $40 in supplies, duct tape, whatever, to repair your water leak. What is your taxable income next time? Zero. Because if my math is right, you made $100 a day, but in legal tax deductions, you spent $50 in fuel, you spent $20 in office supplies, and you spent $4 in repair and maintenance on your farm. If my math is right, you made $100 a day, but you spent $100 in legal tax deductions. What is your taxable income next year? Zero, because there's no taxable income. Here's the thing we get a lot of times, people say, well, so-and-so say they come down, they can hook me up. We tell people come to our office, they be so hooked up sometimes we can't get them unhooked. You don't have to get hooked up. You can utilize legal tax deduction to reduce taxable income, okay? We're trying to get people to understand, get from under that table. Everybody want to do everything under the table. Quit getting under that table, because now we tell people, I was in that table now too. I see you under there, come from under there. We want people to come up and get on top of that table, as we say, and we want you to operate your business. Laws are written for people, by people with money. I tell you all the time, who do you think wrote the laws that we can utilize legal tax deduction? The people with money wrote the laws. So we want you to understand, what does that mean to have these laws? Owner can freely make decisions, minimum legal restriction. Owner receives all profits, as I just said, easy to discontinue. Now, another mistake that we see a lot of people come in our agribusiness development in our entities, especially when we are starting our farm. Okay, one thing that we say, people come in all the time thinking that I have to make money before I can start utilizing tax deduction. Okay, if you woke up this morning and you said, I want to teach everybody how to grow tomatoes. If I want to grow tomatoes, and you say, I went to Walmart, whatever, and bought a book on how to grow tomatoes. Now, once you start your farm, there's a thing that a lot of people miss. This thing called a startup cost. You got to spend money to make money. So if you drove to Walmart and bought a book, the book is tax deductible, the fuel is tax deductible, the internet, the cell phone that you utilize to start this business again, you have to capture your startup costs. Do not wait 2 years later and try to go back and say, I heard I didn't have to file tax for 3 years. Don't listen to that. You need to file tax every year that you earn income of the year that was in. So again, a lot of our clients, a lot of people see across this country, they miss that thing called startup costs, okay? Now, this form here is called a Schedule C, okay, for ordinary business. But if you are in any type of agricultural business, this is one form you do not use. Let me repeat what I said one more time now. This form Schedule C, if you're in any type of agricultural business, you do not use a form Schedule C, okay? So just remember this line 1, okay? I'm gonna circle this line, just remember this line 1, gross receipts, okay? I want you to remember that, okay? Now, these are all your legal business expenses, okay? Advertising, car and truck, commission and fees, contract labor, depreciation, employee benefits. We get all this later. This is called ordinary business expenses, okay? Insurance, interest, legal and professional fees, office expense, pension, and profit sharing, okay? Rent and lease, repair and maintenance, supplies, taxes and license, travel, meals and entertainment, utilities, and wages. These are all legal tax deductions to reduce taxable income. But now, as we said today now, this is ordinary business expenses. Let's look at the similarity now. Now we're going to talk about farm income and farm expenses, okay? Now, remember I showed you on that Schedule C, where that piece of paper said gross receipts, line 1, but in agriculture income, this is how you report agriculture income. You itemize agriculture income, okay? Line 1, sales of livestock and other resale items, okay? Line 1. Line 2, costs and other basic of livestock or other items reported on line A. Now, there's a minus sign for there for a reason. Because if you bought a bull and you sold it for $2,000, you sold that bull for $4,000, you might need to subtract the cost basis of that bull, okay? 3, sales of livestock, produce, grains, and other products you raised, okay? Now, we always stop here, okay? Why? Because everyone gets 1 and 3 mixed up, okay? Many people say, well, my concept doesn't matter. Yes, it does. And let me explain why, what line you put it on. Because if you put you said I put $100,000 on line 1, it says sales and livestock and other resale items. That's meaning that you are a reseller, okay? You are a reseller. If you bought a box of tomatoes and you say I'm taking it to my local farmer's market to sell this box of tomatoes, that's where you would put that income on line 1. But if you put $100,000 on line 3, it says sales and livestock, produce, grains, and other products you raise. You are a producer, okay? If you raised those tomatoes and you took them to the farmer's market and you sold those tomatoes, that's where you put that income, on line 3. Because if you put it on line 1, it says you bought it for resale. But if you put it on line 3, it said I raised those tomatoes, and that's my production income. And many times, and I can't speak for the departments, but many times you apply for programs, they look at your production income. I am a crop insurance agent. I am a crop insurance agent. And now we can't insure resale items, but we insure production income, not resale, okay? So I want to make that very clear. We see that a lot, okay, of putting the wrong line, wrong income or income on the wrong line. We're going to show you how does that look. Corporate distribution program payment, agriculture program payments, commodity credit, CCC loans. A lot of people are getting those CCC payments, crop insurance proceeds, and federal crop disaster payments. And one thing about that, any incomes that receiving crop insurance can be deferred to a preceding year, okay? And I'm an agent, as we work with our agent. Custom hire, other income, and gross income. Now, I want to say this again. This is how you report agricultural income, okay? Now, let's get to agricultural expenses, okay? Car and truck expense, chemicals, conservation expense, okay? We always stop here. Because we get calls all the time. Am I going to get a 1099 for, if I get received conservation insurance, do I got to pay taxes? Am I going to get a 1099? We get it all the time. The answer in most cases, yes, okay? All right, so then a lot of people say, well, I got this 1099. They come in the office and say, well, I got this 1099, but I don't report it because I don't want the IRS to know I got it. But I tell them, if it's in your hand, the IRS already know you got it, okay? But what we're trying to do, we're trying to show you how to reduce taxable income legally, okay? Because if you receive $50,000 for fencing and you spent $49,000 putting the fence up, what is the taxable income? Only $1,000, okay? What's left over? But if you receive $50,000 for fencing and you spent $51,000 putting the fence up, what is your taxable income? Zero. Now, you go down to your local FSA, NRC office, or any government agency, they give you another $500. What is your taxable income? Zero. If you get another $400, what is your taxable income? Zero. Reason being is because you spent $51,000 putting the fence up, you received $50,000, then you came back and receive additional income not exceeding that $1,000, so you're $1,000 in the hole. So what is the taxable income? Zero. Because we get this question all the time. I receive money, I don't want no more money because I'm tired of paying taxes. The first question we ask, where are your legal tax deductions? I don't keep records. And this is why we're showing you how legal tax deductions work. Custom hire, depreciation. One of the things that a lot of our farmers miss. We want you to carry that depreciation because depreciation is an add back. If your farm made $20,000 your bottom line, you had $10,000 depreciation, your farm actually made $30,000. Real quick scenario as you add it back in. If your farm lost $20,000 and you had $30,000 depreciation, your farm actually made $10,000. Okay, so depreciation and interest is the first thing in this institution should ask you for as an add back. Okay, we'll field question that later. Employee benefits program, feed, fertilizer and lime, freight and trucking, gas and fuel oil, insurance other than health, mortgage interest, other interest, labor hire, rent and profit sharing, rent and lease. We get that a lot. Where's your rent receipt? They say, well, they told me to put a little something in their hand. Everything you put in their hand is going to be disallowed because most people, you got to have that receipt, okay? Whether it be a check, cancel check, that's a receipt, or print, need a receipt, okay? Vehicle machinery and equipment, land animals, repair and maintenance, season plants, storage and warehousing, supplies, taxes, utilities, veterinary breeding and medicine. We get this question a lot. You'd be surprised how many people do not know if you utilize veterinary breeding medicine, that is a tax deductible expense. I was in New Mexico or Texas recently. They say, come on, Darrell, they got that. You'd be surprised how many people do not claim their veterinary expense and they breed or medicine. They say, I didn't know I could claim that. We get that quite a bit. And wages, okay? We want our farmers to pay yourself from your farms, okay? One of the reasons you're paying your Social Security and Medicare, okay? But a lot of people understand you're also paying your unemployment, okay? Once you form these entities, you want to pay yourself because that payroll wage is a tax deduction to the company. If you say my farm made $100,000, I pay myself $4,000 in wages. Now you only have to spend out $60,000 because $40,000 is already spent out. And now you've already paid taxes on that $40,000. You're paying that Social Security and that Medicare. But one thing about that, we said people with saving marriages now because a lot of farmers in many situations, the spouse is the only one showing W-2 income or check stub or W-2 in a year. So now the spouse in the home is carrying all the weight of the house, the car, and all the debt because the farmer's not paying himself. But once the farmers start paying themselves, now they have combined household income, in most situations, six or plus figure, because a farmer is paying himself. But one thing about paying yourself, you don't have to pay yourself every week, bi-weekly, bi-monthly, or monthly. As long as you pay yourself within that year, we have some farmers now that pay themselves once a year. As long as you pay yourself by December 31st of that year, now you have check stub, W-2, and you have reportable income as wages for that year. We have some farmers pay when the crops come in. But we have some farmers pay themselves year round, but a lot of farmers pay themselves seasonal or once a year. As long as you pay yourself, that is a lot of people say, I didn't know I could pay myself one time. Yes, you can. Okay. And you can pay in instead of these draws. Okay. Now, one thing about that now, you only feel a 943, not a 941 as agricultural income. We'll show that a little later on. Okay. So that's very important when we talk about wages. Okay. All right. All right. Now, this is the only form you use in agriculture as a Schedule F. Okay. Now, even once we get down real quickly into the entity structures, you still going to use a Schedule F and attach it to the entity. But this is where people make mistakes, because a lot of people fill these Schedule Fs out incorrectly. As I've been showing you, sales that you purchase, 1A, 1B. 1B and 1C is a subtraction from 1B and 1A. Now, let me tell you what happens to a lot of people in agriculture income. We say on the wrong line. What people see is 1B, 1A. But they see this line right here that says subtract line 1B. They stick their money on the very first line they see. Please do not do that. If you are raising products, produce, and grains, you make sure you put that income on line 2. A lot of our farmers are sticking the line, or a lot of accounts are sticking the money on line 1C. That's a subtraction from 1A, 1B. It doesn't make sense if you just got a number here. If you're raising products, you need to put that here. But if you are a reseller, you subtract your cost basis. That's what goes on 1C. So many people are putting operational raised products on line 1C. It goes on line 2, okay? As you see here, corporate distribution program payment, agriculture program payment. Now, for example, if you receive an agriculture program payment and you received $100,000, but if it's not taxable, you put $100,000 here and you put 0 on 4B as taxable income, okay? If it's $20,000 taxable, you put $100,000 here. What is your taxable amount? Only $20,000. What a lot of our farmers are doing are getting the Schedule F and putting everything straight down on the right-hand side. That's taxable income. You've got to identify if you are privileged or if you have the opportunity to only identify what is a taxable amount versus amount. Remember that thing called Schedule C? It only had one line. You never use a Schedule C in agricultural income. As you see here, crop insurance proceeds, that's another one. 4 qualifying factors. You may see with crop insurance in this year, but if you qualify for deferment of a disaster payment, whatever payment may do to qualify you for disaster, you put the $100,000 in 6A, but put 6B and defer it to a preceding year, because 6D say amount deferred from a previous year. A lot of people understand if you receive crop insurance and you qualify for a 4 qualifying factors, you could defer it to a preceding year. So take the 100,000. But don't say I ain't gonna tell IRS. Tell them you got it, but tell them this year I have 0 taxable amount. You're deferring it, okay? This is why we got to understand how to use the Schedule F. Number one, use it. And second, how to use it correctly. If you have an entity, you still use the Schedule F, okay? And here's your farm expenses now, okay? If you don't know, you bought a cooler refrigerator for your produce, and you don't know it's equipment, write the refrigerator and the amount down that you purchased. This is what a lot of people make mistakes on: legal tax deduction and reducing legal taxable income, okay? Now, I don't know if you want to fill in a question right now, or we can wait to get it in, okay?
We said we was going to wait to the end, Mr.
Okay.
Tennie.
All right. All right. So this is Schedule F. Move on. Now, again, let me repeat this very clearly. This is the only form you use in agricultural income and expenses, is that Schedule F. Okay. Even when we get in, you still use the Schedule F and attach it. And now you see why you never use a Schedule C. Okay. All right. Now, right quickly, W-9. A lot of people have problems with these W-9s. Okay. Because this form clearly identifies what you have here as individual, corporation, or a S corp or a partnership structure. This is identifying a structure. Let me tell you why. Because in your W-9, it says Social Security or EIN number. Now remember, this thing does not say Social Security and EIN number. We advise everyone in many situations, do not, some places you have to, just for your identifying factor, do not put your Social Security number on the form. Always use your EIN number, okay? If you don't have an EIN number as a sole proprietor, you can still get an EIN number. It's free online. If not, call our office. We have a whole department that's handling all your structure. Always remember to use your EIN number. Do not, if you cannot, do not put a Social Security number on this form, because what that is saying to the recipient is, this is where I'm gonna pay this person, and anybody over $600 is going to get a 1099 in your name, okay? Now, another thing about this, one of the reasons they identify these questions, because there's a rule: if you are a corporation is not required to give another corporation a 1099. A corporation is not required required to give them corporate 1099. So again, in filling these forms out, this thing says Social Security number or EIN. Never, in most situations, if you can, do not put your Social Security number on a W-9. Always use your EIN on a W-9. Okay, all right. Now, 4835 is another form that you can have for rental income if you are a land renter. Okay. Now, real quick, we're gonna go through the benefits of financial statements. Please, ladies and gentlemen, the biggest thing that we need in our agribusiness community is good financial statements. We always tell people we're not a good bookkeeper. We are the gatekeepers of good record keeping in sense of profit and loss statements, balance sheet, cash flow statement, trial balance, general ledger. In our firm, we have a whole department. That's all we do. We want to be your accountant. We always provide your profit and loss statement in one booklet, as this booklet as identified here, balance sheet, cash flow statement, trial balance, journal ledger. This is what we provide all of our farmers in one booklet. Okay, all of our agricultural business owners in one booklet. We make sure you maintain that, and we are your analysts, and we are your communication between institutions of lending. Okay, now this is real quickly. Balance, profit and loss statement. I'll read the whole thing. Also, all called an income statement is a financial statement that details the income and expense over a specific period. Okay, now this is how a profit and loss statement looks. Okay, all your incomes and your expenses, categorization of your expenditures. Okay, but as long as you, like we say, but this is your tax return at the end of the year. We always say jokingly, if you didn't have no kids, we keep it moving because this is your tax return at the end of the year. We already have your documentation, already have your tax return at the end of the year. Okay. Now, balance sheet. This is very, very important. That provides a snapshot of what's on. But this line here is very crucial, as well as amount invested by the shareholder. A lot of people don't understand any money that you put into your business to get started, is considered that you have paid tax on it from W-2 income. Any funds that you put in a business to start a business out of your personal pocket is called a loan. Okay. And that loan should be placed on a balance sheet because that shows as well the amount invested by the shareholder. Okay. That is a loan to be repaid because you are loaning business money. This is how the balance sheet looks. Okay. Current assets, current liabilities. This is how a balance sheet looks. Okay. And this is a very important piece of paper in institutions. Okay. Cash flow refers to amount of cash equivalent being transferred in and out. This is a cash flow. This is a statement of cash flow. This is how your cash flow statement looks. Okay. Our trial balance, basically is a balance between your ledgers. Okay. This is how your trial balance will look. Debits and credit, your trial balance. But this also, the next one is very, very important, is that general ledger. This is where we have a lot of problems, a lot of arguments between partners and individuals because this is identified from January 1st to December 31st, all the categories on your P&L, every transaction went through and how these transactions come through, okay? It identifies, if you say on my fuel, what is my total fuel amount? It tells you from January 1st to December 31st, every transaction came out. This is called the general ledger, okay? This identifies everything, every transaction on a daily basis, okay? Now, these are your financial statements, and we're asking everybody, please, understand, we got to get into better record keeping. We tell people, when you go to institutions, how are you going to go to institutions when you say, I don't have no financial record? You don't know where you're at because you don't have any data where you came from. And you don't know where you're going because you have no financial record. So we have a whole department that handles that. We would love to have the opportunity to work with you. Now, if we're going to get any disregarded entities, I won't read everything. But one thing about disregarded entities, also called a pass-through entity, is one that is distinct from the owners for some purpose, but not when it comes down to taxes. Corporations are a general example of business disregard entities that is not disregarded, except as corporation risks, real estate and trust funds. A corporation generally pays taxes on its profit before distribution. The shareholder. But what we're trying to get into now is show you what does it mean to have a type of entity outside of sole proprietorship. Now, the partnership is an aggregate of two owners, two or more persons contribute assets to business. This is called a general partnership. Very easy to organize. Better financial strength than sole proprietor. But combined judgment has legal status. Each partner has personal interest. But a general partnership, one thing about general partnership, the responsibility can drill down to the owner. Okay. We have people come in all the time and say, we ate this together, we slept together, we did everything together. But one thing I tell them, you never made money together. Okay. So we want to show you how the best way to structure that. Okay. Now, as a 1065 partnership, you have to file your 1065 forms. Okay. All right. But let me stop here with a key one form. A lot of times when people check these boxes on that EIN letter, they're going to have a form in the middle. And many times it's a 1065. But this is what it's called, a 1065. We're going to talk a little about that later, okay? But this is a general partnership. Now, You're going to get a K-1 form. You cannot file your personal taxes without getting the K-1 form to put in your individual taxes. This is a general partnership. But here's what our recommendation comes, okay? Now we're going to get into the big one, okay? Now we're going to talk about that corporation or personal group who establish legal entities by filing articles of incorporation and state secretary granting certain legal right and privileges. Tell you what I just read, okay? S corporation is an eligible S corporation that wants to avoid double taxation, okay? We talk about it 2553. S corporation is not a sole proprietorship or partnership. Here's where we have problems out there, okay? When you go to your secretary of state and you file an article of organization, you're filing a limited liability company. If you're filing an article of incorporation, you're filing a corporation within the state. Limited liability company is not a corporation. It's an organization of a group of people. Okay, that's the thing called LLCs, okay? But when you talk about the LLCs now, okay, a limited liability company has some characteristics of a partnership and some characteristics of a corporation. An LLC may be organized to avoid double taxation. S corporation does not pay taxes. C corporation, payroll taxes, and it's going to pay taxes, double taxation. The frequency comes to S corporation. The owners of LLC are called members and managers. The LLCs are managed by members or managers who may or may not be members. Okay. The distinction of this member managed LLCs are a managed manager LLC. Me and Mr. Tillery form an LLC, right? But Mr. Tillery say, hey, I'm the smartest one of all. I'm gonna manage this LLC. We are now a managed manager LLC. But I might say, wait a minute. I would like both of us or all anybody who's associated with it to make the decision. We just became a member managed LLC. That's that distinction between a member managed and a management LLC. But now, know what each body's doing, but here's a problem that everybody's having LLCs. A lot of people don't understand a limited liability company can choose to file as a sole proprietorship, partnership, or let it be taxed as S corporation. S corporation restriction on number of employees does apply. Can be owned by a corporation, can be treated as a partnership. Earnings may be subject to self-employment tax if you're a sole proprietorship. The question is, okay, what does that mean? Here's what it means. You remember that piece of paper, that thing called an EIN number that everyone messed up from the beginning? When you fill in that EIN number, in most situations, it's going to ask you, are you a single member LLC or a multi-member? And if you're by yourself, most people are going to say, I'm a single member LLC. Nothing wrong with that. When you check that box and say, I'm a multi-member LLC, you're gonna be classified as a 1065 partnership. When you check that box and say that I am a single member LLC, you just told the IRS I'm going to be classified as a sole proprietorship. But what you should have did, you should have checked that box called a corporation, okay? Because your intent, but this would be me, and this is my LLC. I want to be taxed as a corporation. And when you check that box and say you're a corporation, it would have told you in that letter, you got 75 days to fill this form 2553 out. This is where people make the biggest mistake. They do not read that piece of paper. Now, I'm going to come right back a little bit. That piece of paper clearly says in this right here, it will be elected and filed as a corporation and must file in a timely manner a form 2553. This is a piece of paper that no one reads, okay? And no one reads this piece of paper, okay? Now, we're going to go back a little bit here, okay? Now, when you form this piece of paper, you got 75 days to fill it out. If you do not file a 2553 within 75 days, you are going to be denied S corporation election. Unless you write across the top of that piece of paper in pencil, crayon, blood, and ink, filing revenue procedure pursuant Rev Proc 2013-30. That is a late revenue procedure. Filing pursuant Rev Proc revenue procedure 2013-30. That is your late filing procedure that you will normally get accepted. You have to declare that revenue procedure, okay? Just saying that I want to be taxed as a corporation. Oops, I filed late. I didn't know. I'm exercising my articles of my revenue procedure to be elected, okay? Now, the second page is absolutely crucial as well, because this tells who owns this entity. This tells who's owned this entity, okay? Now, one, we always say every year, we always have the friends and buddies come in and whoever has control, and we always have parents. We always tell the parents every year who say, I want to leave this down generationally. I want to pass it down, but I don't know who I want to have control. We always tell people, The person that has the interest, largest interest has control. Okay. Every year we always say in our conference, fathers know exactly which child want to get it. Mama say, I want my babies to share equal. I've already talked to my babies and they say they're going to do right. If something happens, we tell them all the time, no, they're not. Okay. We want you to put this in who hands who you want to have control. If you want the one person have 51%, the other person have 49%, that person with 51% has control. Okay. So anybody that is a part of this entity, the controlling interest is a person that has control. Okay. And we want people to understand it. And another thing about entities, if you are now saying I can only have limited amount of income per year, this entity can receive $1 million. You didn't receive one thin dime from this entity. Okay. It received the money, not you. If you're going to make $1,000, you can pay yourself to your limits. And that is what you're reporting because the entity is receiving the money, not individuals. That's the biggest thing we tell people a lot of times because it's total separation from yourself. This is the biggest thing that we see is understand how to legally structure, or how to correctly, I should say, structure a limited liability company so it can receive the money, not you. When you apply for that commercial vehicle, that car, that truck, it need to be applying for it, not you. Because once you qualify as a commercial applicant, now the company owns the vehicle, not you. Now the vehicle's in the company name, not yours, okay? There's nothing wrong with having multiple entities, okay? Because you hear a lot of people say, you're seeing people who went broke today and driving a brand new truck tomorrow. Why? Because the entity went broke, not the individual, okay? I can reset an entity, but I cannot reset your social security number. These are things that we're trying to people understanding how to utilize entities. You can have an entity that makes 10,000, you have an entity that loses 10,000. That's an offset. These are things we're saying. If the entity owns the vehicles, you don't own the vehicle. If the entity is buying the vehicle, you're not buying the vehicle. This is how you put all the assets in the entity name and not in your name. And there's a difference when you apply for a commercial application when you being a co-signer versus a guarantor. Okay? If you're buying vehicles and stuff in the entity name, you may have to sign one time as a guarantor. But if you buy it in your name or you being a co-signer, that's on your credit report and you are a co-signer. We want individuals to understand in our communities now that the entities buys the trucks and cars, the tractors, the equipment, is all not you. Okay? The entity need to carry the liability, not you. Okay? You can always reset. People have problems all the time. Guess what? You can reset an entity. Okay? You can but you can't reset yourself. All right. And there's nothing wrong with having multiple entities. You always want to protect your streams of income. Okay. So we'll move forward. Again, here's that letter that no one reads. We want people to clearly understand it. Okay. Now, S corporation, double taxation is avoided. Friends, but S corporation has all that except corporation entities pays no income tax. S corporation do not pay income tax. It's paid through the shareholder. Okay. Just remember that. Okay. 1120S. Here's how you file your 1120 S corporation. But ladies and gentlemen, if you're in agriculture, you still file the Schedule F and attach it to the 1120S. Remember, you still file the Schedule F and attach it to 1120S, okay? K1 form, you can't do your personal tax return without the K1 form. You got to get the K1 form because it tells a plus or minus to your personal income. Cannot do your personal tax return. Corporations do May 15, March 15. Individuals do April 15, nonprofits do May 15. Okay. All right. Now, C corporation, life is perpetual. Double taxation for a C corporation. All right. Now, here's 1120. Remember, the other one said 1120S. This says 1120. This is how you file C corporation. Okay. Now, in-home office, real quickly, to qualify, is an office space in your home, which we have a lot of rules have changed now. Okay. But if you got 13.1, 13.9.1, or 12.6, you can claim 12.6 of home market interest, 12.6 real estate tax, utilities, insurance, rent, or any repairs to the portion to the house. Okay, this is in-home office. Now, 8829 is where you file this out. But in getting close to wrapping up, this is where you file a lot of forms that a lot of people miss. But the most important form that a lot of people miss is this form called a 982. Within our community, we do get Schedule C, so we do 1099-C sometimes. Okay. And when you get 1099-Cs, you have to put it on your personal income tax. That means you was charged off and now they're making you pay taxes on that as income. But if you receive that 1099-C and you're in agriculture operation, you do not put in your personal tax. You put that on a form 982. Check that box right here that says discharge due to qualified farming indebtedness. It is excluded from your taxable income. A lot of people are getting 1099-Cs in our community. They're paying taxes on it. But if you check box C that says discharge due to qualified farming indebtedness and you qualify, it's excluded from your income. We didn't hook you up now. We excluded it from your income. Okay? So again, there are other ways of personal residence, people not in agriculture, but this is where a lot of agriculture can be missed because they didn't put that 1099-C on a form 982. 843, if you receive any penalties or entry or penalties, you can apply for abatement of penalties by utilizing form 843. Okay, this is how you get rid of your penalties and requesting an abatement on your penalty. Okay, a lot of people get garnishment. Reason that you get a garnishment so that you to call the IRS. That's the only reason you get. That's one of the reasons you get garnished. But if you get this letter coming in of a garnishment, most people come in when they get this letter with a green stick on it and say, I got this letter, took my money out of the bank. This is the first letter I got. No, you did. You done got 15 more that the first letter you decided to open. But once you call and make a garnishment, you can stop a garnishment immediately. Okay? They're just getting you to make a payment arrangement. Okay? That is called an 843. A lot of people have the liens 12277. Here's how you can ask for withdraw a federal tax lien. A lot of our equipment in our communities have liens on. You can form 14135 to withdraw a federal tax lien. Okay. Now, 943s. Okay, this is the only form that you use in agriculture income. Do not agriculture payroll. Do not please use a 941. In agriculture, once a year, you file a 943 annually, not a 941. Okay. All right. And wrap it up, we want to know what type of business entity you are and understand your requirements, okay? Second of all, foundation of your business will determine your tax liability. That's why it's very important from the beginning to understand how we structure our entities so we can receive the money. Like I said, not how much money we make, it's how we receive it. Always have accurate accountability of day operation. A lot of people say, what's the best system I can use? I say, do not go out here and get the latest version of QuickBooks with a pen and chip with an I-9 backup. You get something you understand. Something that tells you 2 + 2 = 4. That's all you need. A lot of people get quite invested in serious systems they don't understand. Okay. All daily expenditures may have tax implication, reduce the tax income. As we're saying to you very clearly. Okay. The goal is right now is to reduce tax income legally. As you operate your farms or any business, agribusiness on a daily basis, every day you can do something to reduce tax income. That's why taxation is not January 1st to April 15th. Taxation for agribusiness men and women January 1st to December 31st, every day of the year. This is why we're trying to educate our communities, proper record keeping, understanding that it's not how much money you make, it's how you receive the money. Okay? All right. So are there any questions?
First, I just want to thank you so much, Mr. Tennie. You've done an amazing job, as always, breaking down this taxation and bringing down these corporate structures. One of them popular questions I've been seeing pop up is, could you go over a section of this or that? I want to let our audience know that we're going to post this video on our YouTube page, our Freedmen Heirs YouTube page. So this is going to be here for you to rewatch. I'm going to even rewatch this myself to make sure I take me some proper notes and looking at how I'm doing my taxation and tax forms and stuff. So that's one thing. Another question that was asked was, so should a startup startup should be filed if you haven't made any money. So should a startup file taxes if it haven't made any money yet?
Absolutely. Because remember the word you said, startup. You spent some money. Okay. You got to spend money to start up. You got to spend money to go to the Secretary of State and file. You got to spend money to get the equipment you need to start. So that's called startup costs. Absolutely. You want to reduce your taxable income because remember now, if you're on a W-2 income and you say I started up money, that can offset that W-2 income. You say I make $100,000 a year, but I spent $3,000 in my startup. Now your tax income is at $97,000 because it offset your personal income. That's the big mistake people make. They don't understand you got to spend money to make money. So that's called your startup cost. Absolutely.
Okay. Another question was, this person said they missed this earlier, but does your firm cover the entire U.S. or do you have a specific jurisdiction?
We cover the entire U.S. and the territories now. We work with farmers across the United States, and we in the territories now.
Excellent, excellent.
Unfortunately,
One other question I had for you is how can you see effective financial management contribute to the success of a farming operation?
because you know exactly where you're at, where you're going. But one thing about financial is gives you a clear picture. But keeping proper records will allow you to go to financial institutions with your profit and loss statement, your balance sheet, your cash flow statement. But keeping financial records, it gives you a clear picture where you're at. So you understand how do you utilize your operation. You can see how do you utilize depreciation. How do you capture interest? Simple things. I always say like this. I always use an analogy. Ant bite hurt worse than a dog bite sometimes because it's a small thing that matter. So in success of your operation, you clearly see your picture. But the biggest fact is when you're trying to apply for operation capital or credit lines or loans, we like to use the word credit line, you got a clear picture. This is what the institutions want. That's what the purpose, making sure you have this for your institutions, lending institutions.
Thank you, thank you. Let me see if we got any more questions that just popped up on us. Um, Here's another question. Do you only serve farming entities?
We serve all entities. Agribusiness is one of our niche. That's my passion. My undergrad from South Carolina State University, agribusiness. But we serve all entities, from contractors to food trucks to bakeries to everything. We serve all industries. Our firm serve all industries. We want to be your firm. We want to serve you, but agriculture is our niche.
Okay, okay. Do you provide any other services outside of bookkeeping, tax prep, and entity formation?
Insurance and payroll. Now, our firm here, we have a whole floor here. Actually, we have a whole office building here now, which we just acquired our corporate office, our own building here. So we have not only a taxation department, we have a finance department, payroll department, insurance division. We have the whole gamut here at our firm. So no, we apply all services. Okay, and we have a legal department. We have legal person individuals that we refer to, but we are a full-fledged tax and accounting firm. And we invite anybody anytime to visit our office and visit our corporate office and see our staff and our offices about. So yes, we do everything, payroll and everything.
Okay, okay. Well, I know our time is getting limited right now, and I think that some of the questions that is listed, if people rewatch this webinar, you will get those questions answered. Because someone asked about your trade. Well, could you elaborate on your trademark? And you want to answer on this?
Well, just basically, we trademark that. So, you know, a lot of people who have, you know, slogans, logos, and stuff, we always encourage you to trademark. Okay. And one of the reasons we did it, agribusiness development, because people ask me all the time, wherever I go, you know, the years you spend in corporate America, what's the biggest thing that you learned in corporate America, or you bought back from corporate America? The biggest thing I bought back from corporate America, as I always tell people, is that some have tellers, others have bankers. And that's one of the reasons I wanted people to understand the agribusiness way, because we want people to understand how we need to proceed in agribusiness. How do we get the next generation in? Because now we have a lot of families saying, can you talk to my son? Can you talk to my daughter who lives in Chicago, who lives in New York, Philadelphia, that now you could understand, you can still have ownership in your farm back home as an entity, okay? And so that's how we bring the next generation back into agribusiness.
Mr. Tennie, we're so thankful for your time today.
We thank you for the opportunity. And
awesome.
I ask everybody to follow me up on, we have our podcast. We're going to be launching our podcast very soon. We just signed on our podcast studio. And we're on LinkedIn. If you can follow me on LinkedIn, Darrell Tennie, my name, DarrellTnie, on our LinkedIn. We do show where we travel this country, and our goal is about building everybody. We want everybody to be ready for our Harvest Ball at the end of the year. Go to farmersoutreach.org. We would love to be a participant in our Harvest Ball this year, the first week of November. This is our third annual Harvest Ball. We bring farmers together around the country, a weekend of celebration, and also people outside of agriculture around the country.
I've been hearing from farmers across the country as well about your Harvest Ball, so I plan on being there.
I'm looking for you now.
Okay.
I'm looking for you.
All right. So everybody that's following along, thank you for staying and paying attention to this webinar. There's so much useful information. I recommend that you watch it again as soon as we get it on the YouTube page. And can we get the next slide in regards to our next webinar, Trees?
Yes, Mr. Tennie, can you go ahead?
Sorry.
Your slide.
Got
It's okay.
it. I apologize. Yeah.
Okay, there we go. Let me know if you can see it.
Yes. Webinar is get to know your partners in conservation, the best kept secret. I know it's going to be another good one. So please tune in with us. We look forward to seeing you at our next webinar. Thank you again for paying attention to Mr. Tennie, and we hope that the information shared here today will be useful to your lives.
Well, thank you so much, and thank you again for the opportunity. And we want to be your firm, so we're ready to serve you. We want to be your firm.
Yes,
Awesome,
thank
y'all.
you, Mr. Tennie.
All right.
I do want to say before we close that we do have a survey at the end of this webinar. So for all the registered participants who are joining us now, if you could just take a small moment of your time to complete that webinar, that survey, we greatly appreciate it.
Okay. And also, we send weekly tips, so we would love to have anybody. Please send us your email address, and we send out weekly tax tips and weekly tips every Monday morning. Okay.
All right.
All right.
Well, all righty. Thank you so much, everyone.
Thank you
Thank
again.
you.
Thank you.
All right.
I want to
care.
say thank y'all again. Thank y'all so much. We will follow with you. Okay. All right.
Yes, sir. Have a
All
good
right.
day.
Have a good day, everyone.
All right. Thank you, everybody's going. Thank y'all so much again for the opportunity. We look forward to talking to you. Okay. We want to invite y'all in now. When you lose that, we want you to come in the office, visit the office, and see our staff and everything in our departments. Okay. All
Yes,
right.
indeed. We'll have to definitely set something up. We'll
All
get
right.
offline.
Okay. All right. All right.
Thank you. Bye-bye.
Hey, come on in.